I think personally, all the work we did since 2017 was to get us to where we are right now. And if you get off the bus here, you're getting off too early.
If I'm going to put money in this company, what am I getting into? So I've asked you about your strategy. I've asked you about what you're going to do. You're not mine builders.
I mean, QMX was in production up until 2016.
Tell me who on this team wants to go and build a mine with us. Hello and welcome to Crux Investor. First of all, thank you so much for watching this video. If you like it would really help us understand if this is the type of a video you'd like us to be filming and shooting for you. If you give us a thumbs up, you can also leave your comments below. That helps us understand the sorts of questions you think we should be asking, how you think we did, and of course, what you thought of the company itself. You can catch this as a podcast. You can also read about it as a transcription or article on cruxinvestor.com. And of course, for our Crux Investor Club members, you get early access to this video. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to Brad Humphrey, who is CEO of QMX Gold, their TSX-V junior explorer and developer. It's quite a complex story, been around for a long time. Brad's been there since 2016. The market reacted quite positively in 2017, early part of 2018, but it's been all quiet on the Western Front since. Seen an uptick this year in the share price. That's, I think, primarily due to the gold bull run, but they have started drilling. They've got 80,000 meters of historic drilling. They've got planning 35,000 meters to the end of this year. So there's a lot of information which they've got available to them. Now they need to work out how to get it into the market in a way that gets people's attention. So we talk about their strategy, their plans, the available cash, how they're going to spend it, and a few other topics. So take a look at the description below at some of those. Anything interesting in particular, click on the number beside the topic. That'll jump you through to that part of the video. Otherwise, sit back and enjoy what Brad has to say. Brad, how are you doing, sir?
I'm good. How are you?
Not bad. Thanks for joining us all the way from Toronto. Hold up.
That's right, yeah. Looks nice today.
Looks nice today. How, you got itchy feet? Do you want to be back in the field? I
do. You know, one of the great things about having a project in Val-d'Or is that I can drive to site. So I have been up twice during the COVID period, but I'd like to, get out, do some marketing and networking.
Great.
As well.
Okay, well, we're going to hear all about it today, so that's the good news. But why don't we kick off for people new to the story? 1 minute overview. What have you got?
Sure. So first, thank you for having us on, and thank you to all those who are, taking the time to hear more about the QMX Gold story. Very proud of what we've accomplished in a relatively short time period. We're now building on our success with a number of catalysts in front of us. We have 3 drill rigs turning now, a 4th soon to be added. We have a strong balance sheet, and all of this within the backdrop of a much stronger overall gold market. So we see this as a great time to be doing your homework and, taking a hard look at QMX. So what is QMX? First, it trades on TSX Venture under the symbol QMX. From a high level, QMX has a dominant land position. It's nearly 200 square kilometers in the heart of the Val-d'Or mining camp on the Abitibi Greenstone Belt, one of the world's best mining jurisdictions. We have several past producing assets and several historical gold showings all across our property. As I mentioned, we've got 3 rigs now. We're about to add a 4th rig. We're focused on our high-grade river target, the shear zones to the north of Bonifond, a new reconnaissance program called POMAC. And so this should drive a lot of news flow over the next several months. And we also plan to put out our updated Bonifond resource estimate later this month. On top of that, the obvious exploration upside and resource growth potential, we also have a permitted milling and tailings facility, which we pursue custom milling opportunities. It's also important to note that even with more than 35,000 meters of drilling planned in 2020 across various targets, we still are just scratching the surface on this property. And I know I've taken more than the minute, but I also just wanted to highlight that QMX has been fortunate enough to attract the support of a number of strategic shareholders, including Eldorado, O3 Mining, Osisko, Probe, and Eric Sprott. And I believe that's sort of a validation of the quality of our property and the strategy that we put in place that I'm sure we'll get into later on since 2017. And our task now is just to continue to put out strong results and get the story out to the market. Okay,
well, we are going to get into it now. Okay, I'm looking, you've been there since 2016, 2017, extremely strong year. I'm just looking at the share price, right? It's 2017, beginning of 2018. People, really liked the story, and then it kind of fell away big time. And I think in the current bull run market, you've seen a little bit of an uptick. I want to know from you, do you think people get your story? Do they understand what it is that you're trying to do, what you're trying to be, and how you're going to achieve it? Do you think they do?
I think that they are starting to. So, QMX has quite a long history. This property package was put in place in 2003, 2004. It had a number of strategies. So it used to be called Alexis Minerals. They went into production with Lac Carbon. Then they tried to build a mine called Snow Lake in Manitoba. The market wasn't really there for the financing. They ran into some financial problems. And then 2016, we went through a restructuring and a refocus. Once we got in 2017 and started drilling, the market was very excited. So there was a window that opened up that was favorable for exploration companies. And the first place people go tends to be good jurisdictions, and we benefited from that. And then the market sort of fell away, went through some challenging equity markets, had to continue keeping the rigs turning. And, I think through that period, that's when we attracted a lot of the strategic support. And we have a lot of very supportive shareholders that have held on during that whole period. And we've now started to see a better understanding. So we tend to do things very systematic and methodically, which slows things down a little bit. But that is all built up. So all the work from 2017 has built up to what we saw sort of the second half of last year. And that's really where I think the market has started to understand what we're doing and seeing the results. So, we have a resource now, we have high grades, we have a number of other targets that are, starting to percolate to the surface. And I think that's what the market is starting to understand.
Okay. Because I'm looking at this, you've done 80,000 meters of drilling since 2017. You're going to do another 35,000 meters of drilling. So drilling, you like drilling, but what is it that you think you're going to be able to create here? So if you don't mind, can we just start with in 2017, because when you've been there, you were there in 2017. What was it that you decided you're going to do? Because I get the drilling component, but drilling for what? To what end? What type of company did you think were setting out to be?
So we wanted to unlock the value in this property. It had really been untouched for decades. And there's a number of new geologic models that have proven quite successful all around us. And we wanted to apply those to unlock that value in the company. And we started by compiling all the historic data. There is a huge amount of historic data that we use. So we don't just poke holes all over the place with no context around the results. We're very systematic, methodical. Started with Bonifond, started to grow that out, realized this is going to become something, moved on with the reconnaissance program on another target while continuing to build out that Bonifond deposit. And now we've got sort of three projects. So we've got Bonifond resource expansion, the river zone targets moving from reconnaissance to exploration, and we're moving on to what's called POMAC, which may do that same process. We have a priority list of dozens of targets, and my strategy in 2017, had you asked me that same question, was to eliminate targets as quickly as possible. A problem we ran into is we kept hitting gold, which is not a bad problem, but we're still very high on that priority list. And I think there's a lot of value still to be recognized on this property, which is going to come through the exploration drilling and that resource expansion.
Do you think people are tired of the story because it's been going for so long? Do you think that's part of the problem here, that people have stopped listening? I know you've seen a bit of an uptick, in the last few months, because it's gold bull market. All gold companies are seeing an uptick. But do you think it's because of anything you've done, anything that you've said?
I think that starting in, call it September, October last year, when we were fighting sort of 4.5, 5 cents, that's when I think the market started to put together what we're doing. So started to see that, that resource is growing at Bonifond. The shear zones are higher grade, so we've got a nice core that's low grade and broad widths with high grades to the north and south, which completely changes the economics of that type of deposit. And we started putting out the results at the river target, which hadn't been drilled in a decade, and we're proving our new geologic model there, and they were having great success. So I think that's really where the market started to come around to the story and understand what we were doing. And then that's when you also saw Eldorado come in and O3 come in, because they also recognized that valuation gap, and the true potential at this property hasn't been recognized yet.
Okay, but for those guys, that's just option money. At the point they came in, that was just option money. You were not of any significant size. Lots of money being thrown around by people like Eric Sprott, who's obviously part of the strategic investment. You've got an exploration program. You've got a lot of data already. You've also got this mill and tailings facility. What are these strategic investors saying to you? Are they trying to get a sense of how quickly you start to, monetize some of this or create value? Are you having conversations with them about it, or are they happy with the way that you've laid out this plan in front of you?
So we're in constant talk. So one of the great things about Val-d'Or is we all get along, and we're in constant conversations. And it just so happens that all of our neighbors are shareholders, but we are in constant conversations, sharing ideas and thoughts. We are going into an area that had a bunch of historic rules of thumb. You drill in one direction, you only drill to a certain depth. This area is only VMS, this area is gold, which we threw out the window, and that's been proving quite successful, going back through all that. So we share a lot of that information. With Eldorado, we do have an official technical committee where we do, lean on them for technical expertise, and they do see what we're doing on a regular basis, and we share ideas and they help us out, but they don't have any control over where we drill, but they're very happy with what we're doing. With O3, you'll see the deal we did on the milling facility, where they have an option over 6 years to buy that facility from us. We maintain our throughput rate at cost, so that doesn't change. But so that infrastructure, we have had those discussions with O3 on what to do with that infrastructure with the mill, and all across the property, the companies are very interested in. This hasn't been touched. So, for example, that eastern side, where the eastern zone where Bonifond is, and where there's an old historic mine called Bevcon, there's been no real exploration there in 3 decades. So they're all very interested in what's going on there, and they like our strategy and like how we approach things by doing the actual going through the historic data first.
So talk to me about the mill, okay? Because I want to kind of park it, because the interesting bit is the exploration, obviously, right? So most people are very excited about having a mill. Do you think? So tell us about the O3 option here. Are you literally dependent on what they decide to do? What are the terms? When does this option run out? Can you get rid of the option? Do you want to get rid of the option?
So it's quite a unique deal. So, and I think it's a good example of how to create value in this current market. So we aren't trying to I win, you lose, or you win, I lose. This was a win-win, a true win-win. Right now, we have access to 650 tons per day at whatever it costs, right? So relatively small mill, but works with the high-grade assets that surround it. There's 3 historic mines that surround it. All were relatively high-grade, and that was very economic. Now, the idea was, when I was speaking with O3, was they need a place to process their material and specific permits for that. We have that, but we did not want to lose access to that 650 tons per day. Let's say that, so the river zone, for example, high grades, relatively close to surface, a few kilometers away from that mill, we can quickly ramp into that and start production. I didn't want to lose that infrastructure. So we were able to come up with an agreement where we maintain what we have right now. O3 has the option to expand or use that disturbed area for their purposes, while we still maintain that access. So I think that is a great deal, quite creative, and it's a 6-year term. We can still do custom milling in the meantime. They will buy us out of those custom milling agreements if we have one in place at the time, and at any time in the future when we want that 650 tons per day, we have access to that. So that from our perspective is a great deal. The other thing to keep in mind, we're an exploration company. There are costs to having that infrastructure. So we have to monitor the tails. We have to maintain the site. We have to pay the insurance. There's a lot of things involved with that. It sounds, spectacular, but, until we have a custom milling agreement, it does cost us money. It is great for the future of something like a river target. But right now, this deal made a lot of sense for us, and I believe made a lot of sense for O3.
Okay, so is that why you think, a few months ago when you're at 5 cents and around 20 million market cap, the market was giving you zero value for the mill? It was more a liability than anything else. And you think you fixed that?
To be honest, I think that the market still doesn't give us a lot of value for the mill. I think that, if you look back at the market cap and what we were drilling at the time, you can kind of see what the market thought. So, when we first started drilling Bonifond, 200 meters of 1.5 grams to 2 grams, that's spectacular, but the market wasn't really into that at the time. So when we started putting out 44 grams over 6 meters, wow, that is something that they're into. And you can see the movements in the share price. We really have a menu, right? So we have, nice open pit potential with high grades to either side. There's a trend that's 5 kilometers long from Bonifond to that Bevcon asset that has multiple opportunities for Bonifond style deposits. So we have that in the menu. Plus we have these high grade projects in the menu as well. So we really offer a number of things, and we could potentially have cash flow. Custom milling agreements are challenging, and we don't want it to cost us anything. So it's got to be a cost plus agreement. And, it's difficult. If you're a developer, it's always challenging to raise money as a developer. And we've gone down the path a few times where it made sense and they didn't pan out in the end. But no cost to QMX, and nothing really changes. It's not our primary focus. It is a strategic asset that I would love to have cash flowing, but it's not where we focus our time. Our time is unlocking the value across this 200 square kilometer property right in the middle of Val-d'Or, surrounded by other exploration companies and producers that are putting out great results. And that's where that valuation gap, I believe, is going to close, is as we continue to do that. And it's big programs like we have this year, more than 35,000 meters. That's a lot. And we're going to be able to touch on a lot of targets in that and show them the potential.
We'll get onto that. With hindsight, would you have done anything differently with regards to your ability to monetize the mill? Could you have got other tolling agreements in there? Could you have got some revenues in other ways? I know when you're exploration developer, money's tight, you kind of have limited options and you've got to pick not necessarily the best of a bad bunch, but you know what I mean? It's difficult. I do get that. With hindsight, would you have done things differently though?
I don't think so. I think that actually had we been able to do the O3 transaction earlier, we would have done that earlier. They do contribute to some of those maintenance costs now and during the option period. So that's very helpful. We pursued opportunities to do custom milling where we thought it made sense, and there haven't been that many. And like I said, it really comes down to the juniors being able to raise money to put themselves into production in order to deliver that material to us. So I think that by setting up our agreements right from the start as cost plus, where money goes into escrow, anything being used comes out of that escrow account. There's never any cost to QMX. That really was a good way of doing things, and I wouldn't change that. Like I said, I would love to have cash flow coming from it. It's a great business, if you own the mill, but they haven't panned out. They are very challenging to put together.
Yeah. Okay. Let's look a little bit forward now. Do you think because the current bull market, you are going to find it a lot easier to raise the capital that you're going to need to deliver your strategy, and therefore, in a way, you can kind of relax a little bit compared to, say, a year ago, where it was a little bit more difficult? So what are you going to be doing different now? What do those discussions look like now versus a year ago? So
that's a great question, and it's interesting how much the market changed from 2017 until today. So 2017, we still had some institutional support, and that's my background's in equity research. That's where my contacts were. 2018, it became very clear we needed to focus on high net worth, family offices, more retail, because we weren't getting that support from institutions, and we did that. And it was a real challenge. We had some very, very supportive shareholders that helped through that whole process. But it was a challenge. You raise $1.5 million, you can have 30 sub-agreements. So, unbelievable. But now the challenge for us is we've got all the money we need. I go into meetings now and I'm like, don't even try to offer money. We don't want it. We've got more than enough to get us through the nearer term catalysts that we're talking about. And we want to get through that to get that value into the market. What my focus now is to more broadly disseminate the story. So, before where we had to be very sort of focused on people who participated in private placements and that type of marketing, we're now trying to market to a much broader audience. And that's really what the change has been since March to now. The problem, it's a bit of a snag with the COVID restrictions, but, there are platforms like the one you have that I think are very effective to help us accomplish that goal.
They are very effective, Brad. You're right. Let's talk about your program, which is, okay, you've got the money you need to drill, but COVID has had a bit of an impact. You want to be up in Val d'Or right now. You're not. So what is happening on the ground up there? Because fundamental part of the story that you're trying to tell is all about drilling 35,000 meters and doing it, and getting that done, against the program you've set out. You can't do that right now, can you?
We can. So Val d'Or did a great job of locking things down, closing off the outside cities, Montreal, Toronto, and getting this situation really under control. And they've now basically fully opened up. So we were shut down maybe for a month and a half or 2 months. And we've been back in the field drilling since May. The shutdown in March actually helped us in a way. So we were finished our winter program. We still had a little bit of infill we would have liked to have continued to do, which we couldn't do. But because we have all this historic data, so I always think of things there's high priority, high impact, low priority, high impact. You never get to those low priority, high impact jobs because you're always focused on the high priority, high impact. Well, this forced us to take boxes of material home. All the geos took all this material home and went through a bunch of that historic data and found a bunch of additional targets. So we actually, it wasn't great. We would like to have been in drilling, but we actually benefited from that, brief shutdown. And now we've been up and running. We've got 3 rigs, like I said, turning currently. Right now, we're about to add a 4th. And, the adjustments that were made in the office, we have the old Ore Resources production office. You may remember Ore with Luvacor. That office is huge, and we've got 8 people. So the social distancing isn't a problem in the office. In the core shack, we did put up some sheeting just so that, we could be logging at multiple stations at the same time. But we haven't really seen much of a negative impact as of right now. I was in Val d'Or 2 weeks ago, ate in the first restaurant in 5 months. So it's a much different situation up. Right. They do look at you a little strange with your Ontario plates on your car, but other than that.
Okay, so I'm trying to work out a few things. I'm trying to work out why your share price isn't moving like some of your peers. Okay, I don't know if it's because of your systematic approach and the lack of till now promotional attitude, or are you being held back by some institutions? Are you still part of the Forbes and Manhattan group?
No, we're not. So great question. QMX and its predecessor company, Alexis Minerals, was part of the Forbes and Manhattan group. Forbes and Manhattan actually put the original property package together in 2003, 2004. But Forbes' strategy and focus has always been on development and production. And when we went through the restructuring in 2016, we refocused as an exploration company. So it really wasn't a high priority for them. They have since divested, and we are no longer part of the Forbes and Manhattan group.
Okay, so let's talk about some of the other players that are part of this. Who are the other big players in this that can affect your ability to, I don't know, do business better?
I know what you're getting at. So we have actually, gone from in November 5 cents to 20 cents. So that not terrible, but I know what you're saying. Since March, and given the results that we've put out, I mean, we just put out a spectacular set of results. In fact, the challenge for us was deciding which headline to choose of the 3 holes, and to watch the share price grind a half a cent and then back and then a half a cent, it's very painful. But what I think has happened is we traded a lot of stock sub 10 cents. So I think that a number of investors are looking and saying, well, I've had a good pass, and now we're sort of rotating out of some of that. I think personally, all the work we did since 2017 was to get us to where we are right now. And if you get off the bus here, you're getting off too early. And that's my personal view. But, people do what they do. And when they buy the stock, they have the right to sell it. But I do feel, given the way it trades, that some of these great press releases are considered liquidity events that allow them to get off positions. And I think that, at some point we will get through that. And plus, it's important to note that we do have all this drilling going on, all these assays coming in, and it's going to now create a situation where we're going to have press releases on a very regular basis. And that's really how you can get through some of that additional pressure.
Okay.
So it's just my guess. I mean, I'm not 100% sure, but that's one theory.
Well, it'd be interesting to understand what the big overhang moments are, because if there's more to come, it's going to hold you back. I mean, talk to me about warrants at the moment, because you've got a few warrants outstanding, so that could be a little bit more cash coming through. What's the timing? Yeah,
so far we've had about $200,000 worth of warrants come in. Nothing really serious. They all expire between November 2020 and March 2022, more weighted to the back end of that. But if they all come in, it does raise about $8.5 million. So very material for us, and that would be spectacular. All the warrants currently are in the money, and there isn't any kind of acceleration for that. But I think that at some point we'll continue to see those come in on. I think it'll be a trickle as opposed to a big wave at any particular time.
Okay, how much cash have you got today?
About $10 million.
Right. And how are you going to spend that? What's the breakdown?
Since 2017.
This is great. But how do you break that down? How does it get spent?
So we have our burn rate is about $135,000 a month. That includes all the environmental, but does not include the drill programs. So that's our annual budget would be based on that, and then the drill budget takes up the rest of that. So in Val-d'Or, and this is something I should have mentioned at the very beginning, it is one of the cheapest places on the planet to drill. It costs $100 a meter, and if I take that, and that's all in, and if I take that one step further, so I take all the flow-through dollars spent, divide that by the number of meters we have drilled, so that would include truck rentals and anything else that can count as flow-through, it's $135 a meter. There are very few places on the planet where you can do that much drilling. So our 35,000 meter program, you can do that math. It's about a $4 million program in 2020. So we're in great shape. We are going to try and spend more than that. The whole idea is to get through the targets as quickly as possible, but we are still going to maintain that intelligent approach where we aren't just putting holes in all over the place. If you look at our drilling to date, we've had a very high success ratio. And the reason for that is we take advantage of the available information before we start drilling.
Are you buying or selling shares at the moment?
Personally?
Yeah.
I've never sold a share. So there are, very few windows when I can actually buy stock. In Val-d'Or, it's a 12-month drilling season, really. Well, 11-month. There's hunting season, which is October. The first half is with bow, and the second half is with guns. So we don't have any drilling going on in the field. And that creates a window for me, usually, where we don't have assays or anything else sort of in the pipe when I can feel comfortable buying stock. And you'll see, like last year, September, October, November, I was a buyer. I have never sold a share.
Okay.
And, I'm not a rich man, but I own about 3.5 million shares-ish in that range.
Okay, fine. And the management as a whole, what are they sitting on?
It's probably about 2%. So our board is relatively new. We've made a bunch of changes to the board, and part of it is, with the transition off of the Forbes Manhattan Group. But they are starting to, a few of them have started to build positions. Our previous chairman had about 8 million shares, and he's still, big supporter. But I think that we'll see that rise as time goes by.
Okay.
Everyone's very excited.
Okay. So who are the big shareholders who's the top 5, for instance?
It'd be our strategics. So it'd be the Eldorados, the O3 Mining, Osisko Probe, and Eric Sprott.
Right.
We have some institutional holders, but not of any real size anymore. And then we've got a number of retail holders or high net worth holders that are getting close to 10%. That have been very supportive through the, that whole downturn in the equity markets, and they still remain very supportive.
Okay, tell me about this new board. What have they ever done to create shareholder value? What experience have they got? What's the track record?
Yeah, so one of the recent additions was Bob Bryce, and he was on the board of Integra. So right next door, that was the original entrance into the Val-d'Or camp from Eldorado, and the rest of the board, is there's a focus on governance. When we were working on environmental permitting, we have Sergio Marchi, who's got the governmental connections. And as we wanted to branch out more to a broader crowd, retail crowd, we've also added some an individual that helps out on that front as well, to help me with the marketing.
Okay.
The main, from your end, the question you're asking, the main one is Bob Bryce, who was very involved with the Integra, and that's why we brought him on, and he lives in Val-d'Or, which is even better.
Yeah. Okay. To be honest, I stopped listening when I heard his name because I think that's the name I recognize. Okay. So help me understand what it is you're trying to do, because I've asked you about your strategy, I've asked you about what you're going to do, but I'm still trying to work out what you're like. Okay. You're not mine builders, right? You're not.
QMX was in production up until 2016. So
yeah, but you know what? Tell me who on this team wants to go and build a mine with us.
I think that we are all more near term. We are all much more focused on unlocking value by exploration and resource expansion.
There you go.
Now, but on that, because of where we're located, right next to Val-d'Or, with all the infrastructure that's in place, Bonifond is just north of the highway. So if we were to move that, it's an earth moving exercise for us. We could use infrastructure that's already in place just down the highway. So it's mine building in Val-d'Or is different than mine building at the top of the Andes or in the middle of Africa. It's a lot of the infrastructure already in place and a lot of the skill sets are there. But that's not our near-term plan. So definitely our near-term plan is realizing value, closing the valuation gap with our peers through exploration and resource expansion.
Okay, that's what I'm getting at. Okay, you seem very comfortable at that end, exploration, and maybe bring it through to some kind of development type phase. But I just want to be clear with people because I need to know what I'm getting into. If I'm going to put money in this company, what am I getting into? So thanks for being straight with me. So if that's the case, where is the exit point for you? What's the timing on this? Because otherwise you just keep drilling and you keep drilling and you keep drilling. And in this market, maybe it is easy to raise money and maybe that's fine. But tell me what your plan is.
So I think so what's the exit strategy? So, there's really two paths. So we go down the path of exploration and proving up ounces to a point where we start to develop something. And then we build value in the story, show what the potential of the property is, and potentially get acquired. So those are the two paths. We're focused on that pathway to getting something to a development stage. Let's say that on Bonifond, we prove up the north and south shears, then we prove there's additional Bonifonds along that trend, get a meaningful number of ounces there. Maybe that becomes something that gets monetized. And we still have 150 square kilometers of great ground in the heart of the Val-d'Or camp. There's a lot of opportunities for us. Right now, I don't know which one of those we're going to take. Time and results will decide that. We'll make that decision at the right time. Right now, we're very much focused on expanding that fund, which is turning out to be much better than we expected when we first went in there, and proving some of these other targets that are on the property. That's why we started doing reconnaissance programs. So I didn't want to get stuck just drilling one target the whole time. I wanted to move on to other. QMX is like a company that has 4 or 5 exploration properties, all in different areas, but they're all just happen to be together, on the same property. They're very different and, different stages. And I think we're going to find a lot more of them.
Right. I think then possibly maybe part of the problem here, but maybe that's one for another conversation. Can we talk about royalties? So you've got royalties on your property. How many different royalties with how many different people?
So this is a historic mining camp. So there are all kinds of different royalties. I think in general, it's about 2.5% across the property. A big chunk of this property came from Ore Resources, which was bought by Teck. And then Teck sold that royalty package to Osisko Royalties. So that is the biggest part of this. But, there's, some little claims that have 4 or 5%, which we probably won't drill. And there are other claims. Most of the claims are about 2.5. So in general, that would be what it is across property. But it's 470 or 80 claims. And some of those claims are individually unique. So
okay.
It's
okay.
in general,
there's nothing prohibitive on there. For instance, does Glencore still own any royalty on this, on any component
Glencore
of this?
Glencore has a non-participating interest in Bonafont that, as we spend money, they just go down to what will end up being an NPI. So that would be the only Glencore interest. On the property.
Okay. So
all of these things we constantly try to renegotiate and make more flexible. And, we'll see where that all shapes up.
Well, exactly. I think that would be quite a good thing to feed back to the market and sort of show people where it does shake up or shake out. Because if there's anything prohibitive there, which stops you from one of your exit plans, it'd be nice to know. Right.
Yeah, no, there's nothing that I would view as prohibitive. And if there, that 1 or 2 claims that does have much higher royalties on it, we just won't drill those. We have that luxury because the property's so large.
Yeah.
Right. It's nothing we're drilling today has anything that I would consider abnormal for a historic mining camp.
Okay. Are there any other types of encumbrances on the property to do with tailings or liabilities elsewhere?
So there is environmental liability on the tailings facility. It's about $3.5 million, something in that neighborhood, or $3 million, and that will go to O3 with the option.
Okay.
So that is something that is there. We maintain the monitoring of all the environmental and everything there. Everything's in good standing. In fact, we just upgraded a permit in September last year when we were working with Go West. And everything's in perfect, good standing, but there is a liability.
Okay. Thank you for that. Look, Brad, I think that's a nice first run through. I always do these first. We've never met before. We've not spoken before. We've not heard the story before. I want to get to know the management team, what's going on up there, how they're thinking. And I think you've done a good job of that today. So I do appreciate your time talking to us. And when you come back on next time, it'd be really nice to talk about these different exploration pockets that you've got and how you do kind of bring that together. But in the meantime, you've got enough money to do the drilling you want. It's a great environment for gold companies. So, good luck to you. And pick up the phone, let us know when there's something to say.
Absolutely, I will. We're very excited. It's the best shape the company's ever been in, and we've got a lot in front of us.
Beautiful.
So thank you very much for your time.